Hello, everyone, and welcome to this edition of Investing and Trading Live. My name is Josh Lilquist. Today is I guess the 3rd of October, second trading day of the week. It is Tuesday. Yes, it is Tuesday the 3rd, second trading day of the week. Boy, that was a tongue twister. So, with today's action, we're seeing the markets to gap lower here today. We're going to discuss the drop here today in the major market indexes, S&P 500, Dow, the NASDAQ, the Russell also gapping lower on the day. So basically what happened overnight is the futures dropped, and according to the news, they're pressured by yields. Okay, whatever. So we're going to discuss some of the opportunities as these markets continue to drop. We're seeing especially the S&P 500 do kind of a little something that is very common in price action. So we will peek at that today. We'll also look at Target. Yesterday, Target, boy, they had a really rough day. Matter of fact, actually, it's before the open here today, as you know, because the market hasn't opened up yet. It's 8:09 Central Time. But yeah, Target had a really, really rough day yesterday, gapping lower again here today, probably about 70 cents or so, according to right now. So Target's really struggling. It's in that demand zone we've been waiting for probably since June, or even before that, probably since, March of last year, May of last year. So we'll discuss Target as we get into the market here. They had a rough day yesterday, along with Carvana. They were down 6.5%. 3M was down pretty bigly, and rounding that out, NVIDIA actually had a positive day of about 2.95%. So that being said, before we get in the market update, there is risk in trading. You can lose money at one time in your life. This is strictly for entertainment purposes only. Hopefully you find it entertaining as well. This is mainly for my entertainment, but hopefully you find it entertaining as well. Kind of messed that up, but we'll go with it anyway. All right, S&P 500. We look at the SPY as the gauge of the market, just because it's the S&P ETF. We have broken through that demand zone twice here. We're going to be gapping lower. It has not closed, my friends. For those of you that do like to follow the closes of different zones, it has not closed below the zone that we've been talking about for quite some time, that was developed back in June of 2023 of this year. So my friend, the zone has not been closed in a daily candle beneath it. Currently at 427.31, that's where it ended yesterday. It's going to open up right around 424.90-ish, depending on what happens here the next 19 minutes. Dow Jones yesterday had an odd day. It had a big drop as the day went on, but then strengthened and rallied at the end of the day and closed just down, still down for the day, 0.2%, but currently at 334.09. The NASDAQ was really the only positive one of the day. It did actually open up the way it looks, and actually had a positive day, up 0.83%, which is about $2.99 $2.99. So the NASDAQ outperforming all the major indexes. The IWM yesterday was down 1.5%, which is about $2.67. Currently at $174.07. That one, just like the other ones, gapped lower just a little bit, and this one actually had probably the weakest pressure, but it is in that demand zone that was created back in May. XLE, so oil and XLE were probably both down yesterday. That's going to be gapping lower, probably going to open up at the lows of yesterday. Currently at 88.59. XLU was down 4%. That one had a big drop yesterday and continuing to drop into a few pivots, which don't necessarily mean a whole lot unless you have a demand zone there. I don't really see any good demand zones, but this one here could potentially go down to the lows of $43, $43.30 or so. Might take some time to get there, but the way this thing is moving, it's looking pretty grim. USO, as I mentioned, oil will probably be down because the XLE was down. That is down about 1.82% yesterday, which is about $1.50, $1.47 to be exact. Currently at 79.39. Let's look at oil futures. Oil futures currently at $88.75. So the big drop last 3 or so trading sessions. So Saturday, Sunday, or Friday, Monday, and Tuesday. No. Thursday, Friday, and Monday. So oil slowing down here. Any major notables? You have let's go back to the futures market. So let's look at the 10-year bond, the 30-year bond, currently at 111.93. 111.30. My bad. I don't know what I'm thinking here. Corn, 487 and a half roughly. Wheat, this one also in a downtrend. So some of these commodities really showing some weakest strength here. Bearish pressure. That's what I'm trying to say. Your other commodities that we always look at, gold, and that's kind of in the title here. Gold has been dropping ever since May of this year. Now, we are in a kind of a slight, not the best demand zone, but it is kind of a demand zone. And gold, see some news here. Bitcoin and gold poised for growth amid U.S. fiscal troubles. Top macro investor says. Okay, whoever that is. That's from News BTC. COMEX gold delivery intentions breakdown. Stock slip. Okay. But yeah, so gold is really showing some weakness here. And I mean, just because it's cheaper doesn't mean it's time to go buy. I do like this as a safe haven, but it quite frankly hasn't been inversely correlated. That being said, for those options traders or people that like to get into stocks or ETFs, gold is in that demand zone, it's also low on the percent Bollinger Band, so it's low over time. It is in a demand zone, so odds are there. So manage your risk accordingly. Currently at $1,842. We will look at the GLD ETF too. Silver, currently at $20.97 on the spot price, also plummeting, breaking that demand zone, just flying through it. And I see this testing the lows of March of 2023, right around the $20 mark. I do like my physical gold at a much lower price, but might be some opportunities to get into some options here. This might actually get down to 15. Back in 2020, there's a slight demand zone, kind of a sloppy demand zone. There's really two of them there, but that one here continuing to plummet. So let's go back to the ETFs. The GLD ETF is gapping a little bit lower on the day, as you know, because the futures market is open around the clock during the week. Low on the percent Bollinger Band, so might be an opportunity there for a long position, but then again, you are catching, as they say it in the biz, a falling knife. SLV also gapping lower. It's closing that gap right now from March of 2023. There's actually two gaps there. So this also low on the percent Bollinger Band, getting near a pivot low around $18. Might be some opportunities. Might be some meat on the bone there. By the way, volatility has spiked up a little bit. Yesterday it was up 5%. So volatility is creeping back up there last couple of sessions. By the way, I'm looking at the VIX on that. Closed yesterday at 1860. Let's go look into some Forex. Just because we have the dollar really driving a lot of things here. We have the dollar surging yesterday, roughly from 106.18 all the way up to 107, almost right at 107. I do like this at 107.50. If you look at this into the archives, I probably talked about that, taking it to 107.50 probably many weeks ago. So I do like this going up to 107.50. And with that action there, we could see some hesitation right there, right at the 107.50 mark. It's kind of a psychological number. So let's go to the euro dollar, which is going to be going down, inversely correlated. So kind of in no man's land, but yet in a downtrend. I'd have a short bias on this, and really waiting for the position to get back up to 106.75 or close below 104.25 before I did anything with that, just based on some risk management parameters. The yen is right at the $1.50 mark, so that one is going to be, I think it actually hit it, 149.93. Has been really soaring here for the last, since August. So that one showing a lot of opportunity for those that are trading the dimes, like I always talk about. One, two, yeah. So that one's wait and see mode. Pound dollar, I would have a short bias on this and be looking for potential shorts, in my opinion, in entertainment purposes only. And currently looking pretty good. I'd take it down to the $1.20 mark, and we're getting close to that. So we are low on the curve, so odds and probabilities will start to become a little bit lower as we get closer to the $1.20 mark. Aussie dollar, currently a short bias. I'd be looking for shorts here and looking pretty darn good. I'd look to take this down on the next trading cycle down to 62.50. Looks like a good opportunity there. But don't just go and short the market just because I said. Dollar, Canadian dollar, I wouldn't be trading this a whole lot. Euro dollar, this one not much either, but the dollar Swiss. Some people don't like the dollar Swiss because the peg things back in 2017 or 2018. But I don't mind. I like this pair. It actually moves pretty good. It flows pretty good. Currently, I would have no bias on this right now. I'd be in wait and see mode anyway. Aussie yen. This one here has a long bias. Currently in a wait and see mode. I'd wait to see it until it gets down to 93.25 or get a close above 95.75 before I did anything with that. So in wait and see mode on that. But showing some pretty good volatility here. Ooh-wee. New Zealand yen. This one is in wait and see mode. I'd be waiting to see do anything on that. I wouldn't be doing anything there on the New Zealand dollar. Also in wait and see mode. Come in no man's land. Anytime you get near these whole numbers, there's just not a whole lot of action on there. You see a lot of sideways action in some of these pairs when it's near whole numbers. Aussie New Zealand, same thing. This one actually is in a short bias. I'd wait to see a close below 106.75 or get back up to 109.25 before any action there. So manage your risk accordingly on that. So that rounds out your currencies. Looking at some other stocks, as you mentioned, the title, Target down 3.5% yesterday, closing the day at 106.79. In that demand zone, which I still like that there. I think that was a weekly demand. Let's go to a weekly chart. Yes, in a weekly demand. So I do like this one here. Ultimately, not closing anything below 106, but right around the $106 actually. No, I'm sorry, not $106. $100. Currently at 106.69. It's going to open up a lot lower, about 60 cents. That's Target. Let's look at TKO. That was up yesterday. We've talked about that for a while now after Endeavor purchased them and merged with UFC. Vince McMahon allegedly has the say or the final say in both companies now. So a very, very powerful man right now. Nike gapped up big time last week on earnings. They showed very, very good earnings. Very surprised, up 18 cents with about 24%. So gapped up, but the first two trading days this week, Monday, Tuesday, down roughly about 5%. So Nike's still showing weakness by gapping up. We were talking about some potential options on that. I believe there was a strike around the 80. I think it was $80. 80 or 85, or I forget what it was exactly, but would have looked very good and probably would have done really well. But the best trader in the world that I've met is woulda, coulda, shoulda. And the risk just wasn't worth the reward with earnings and with all these other retailers struggling with theft and everything. The risk just wasn't, it didn't make any sense. It wasn't worth it. So, Nike, there'll be opportunities there with Nike. Dick's Sporting Goods down about 2% yesterday, 2.1%. And let's see, continuing that slump, going back down, actually gapping down to the lows of all the drops here. Right around, probably going to open up right around 105.11. So going to be gapping down another $1.20. So that rounds out your stocks. Any other notables yesterday? Not really. PLUG was down 10%, but that's a dead stock anyway. I wouldn't touch that with your money. Carvana, as I mentioned, down 6.5% yesterday. So after that rise and getting right into that demand zone, it's been testing that demand zone 2 times. If this market does get back up there and strengthen up, get back out there, I won't see that holding again. 3M down 3.6% yesterday, and that rounds out your stock. So there's your market update of the day. Today is the 3rd of October. Make sure if you're listening to the podcast to smash that subscribe and like button on Apple Podcasts, iHeartRadio, Spotify. If you're listening on the Spreaker app, thank you for that. We like our listeners on Spreaker. Make sure to put any comments. If you don't like the show, send us an email. Let us know how we can improve that for you. If you do, make sure to give some likes and some comments on that. And as always, collect your profits when they're shown to you and protect your losses, keeping them small. Until next time, retire young, my friends.